do about it. Hi, I'm Mary Beth
And then I'll
Montesi,
share-
owner of Online Trading Academy here in Houston. Listen to Power Trading Hour to learn how the markets really work
Welcome.
and
How
how
are
you
ya?
can act like the
Great.
professionals.
Come in like a
Call
house
us
of fire,
at
huh?
281-820-8905
That's right. There was a
to register
detour on
for
the
our
way.
complimentary
Uh-oh.
half-day class.
I was like, wait,
Find
this
out
can't
more at
happen.
Shocking.
HoustonOTA.com and listen
Houston
to Power Trading
traffic,
Hour
what?
weekdays at 2 p.m. on Business 1110 KTEK.
Did you know that 63%
There we go.
of homes
We're already
contain
live.
allergens from cockroaches? And that
Share,
mice
right,
spread
post.
potent
There we
asthma
go.
triggers found in 82% of homes.
All right.
It's true. Common household pests are major offenders on the list
It's a
of
big
indoor
move.
allergens.
Office.
Learn what you can do to help
The
your
latest
family
is,
breathe easier.
looks like
Visit pestworld.org.
end of this week.
A public service
Cool.
message
Yeah.
from the National
End of
Pest
this week, we should have
Management
everything
Association and
finalized
the
on
Asthma
signing.
and Allergy Foundation of
Exciting.
America.
Yeah.
The following program does not necessarily represent the views or opinions of the staff, management, or ownership of this station.
But it should.
It's time to get on the right
Don't you
path
think it
with
should?
Right Path Real Estate
Should
Radio
what?
with Tom
It
Perry.
should represent the
Get the
views
answer
and
to your
opinions of
question
the,
that's keeping
of the
you
ownership
from
and
taking
management
action
of the
and
station.
succeeding today.
Possibly. But they can't control what everybody talks
Right.
about.
Of course. Please come inside.
Get ready. The guy that put your fears behind you is on the air
All right,
now.
y'all, stand by.
Taking calls at 713-785-1817.
All right, hot mics in 5,
Toll free
4,
877-881-0271.
2, 1.
Now here's your host, Tom Perry.
Hey, welcome to the show. Right Path Real Estate Radio, 713-785-1817. I'm starting to slow that down a little bit. I'm live in the studio with Jennifer Hernandez. Y'all probably know her. She's with Legacy Mutual Mortgage. Good morning. Welcome to the show.
Hi, thank you.
Yeah, long time no see. I haven't seen you at any events lately, right?
Well, I've got my sidekick, Paul.
Yeah,
is
Paul's
a
doing great.
new loan- He is great. I've got small children, so sometimes I want to escape those nighttime events. But
Yeah.
selfishly, but
Yeah, Paul Tren, he and I are friends, and we've played golf a couple of times together.
yeah,
Good guy.
he's a firecracker. He's doing awesome.
That's fantastic.
Yeah.
So what are you seeing and going on in the marketplace? You know, that's one of the things that I love about having you on board is that you get a chance to see not only what are investors doing, but what are retail buyers doing. You kind of get a feel for what's going on in the entire marketplace. So
We do. Our loan amounts have gone up a little bit, which is probably a signal of just, well, it could be several things. But for us, we see things in the higher markets starting to move.
when you say, so quantify that for us.
I mean, for me, that's anything, 400 and above.
Okay.
Probably. So that middle market, there's still backup offers. I still, in some of the lower markets below 300, we still have, 5 and 6 offers, multiple offers. We still see that. Actually, the one that was 5 or 6 multiple offers was actually a 750 house
Oh, my
last
gosh.
weekend. Yeah. So just
What part of town?
It's central. I mean, it's kind of in the Westview-Wesleyan
Okay.
area. But
Oh,
it's just these
if you can find something there for
sought out.
$750, I mean,
Well, it wasn't in Westview, but it was in that general vicinity. But it was just a well sought after neighborhood. So there's still pockets where it's a seller's market. And we just still see, I've actually recently seen some contracts happen where there was no pre-approval letter, and I was just amazed by that. I'm not sure what
So the
listing agent would
seller-
let.
Yeah, the seller is basically accepting an offer, and they've not been pre-approved.
A couple. I
Yeah.
mean, I don't
Is it a cash
normally see
offer?
that. No,
No?
I don't normally see that where they'll call us like right when the contract was accepted, and I'm like, hey, did you guys already have a pre-approval letter? No. And I'm just thinking to myself, how did the listing agent ever let that happen? But it's only happened a couple of times.
Well, there's a new listing agent created almost every week, right?
Well, that's right. I mean, you just never know.
Right.
So, we see all kinds of stuff. We still see appraisals come in short. I've had some that were, and again, it's always going to happen. I mean, we do 20 to 25 deals a month. So, I mean, obviously there's always one or two that,
Right.
It was actually rehabbed, and it just didn't
meet appraisal.
No, it was like 9 to 10% below. I mean, it was generously overpriced, but the client didn't have the money to
make
come
up
up
the
with the
difference.
extra.
So can you share actual numbers? So what price range? What did
It
the
was
house-
it's like, let's say it's 250.
So it was contracted at $250. and came back at like 225 on an appraisal, something like that?
Yeah, it came in right around there. Yep. And so actually they ended up coming down because it's an FHA appraisal. So in that price range, I mean, you're pretty much stuck at that point. And the buyer just did not have the extra money. So they were just going to let the contract go. And they did rebuttal. We welcomed a rebuttal, and they used the same comps in the rebuttal that the appraiser used, but the listing agent basically said, no, the appraiser's wrong in the adjustments that he's giving. He didn't adjust enough, and that's violates HVCC. So those kind of rebuttals where you're giving...
Gonna fail, yeah.
When you're giving, if you're a listing agent or if you're a seller and you're rebuttaling the appraisal, you cannot give your opinion of what the adjustment should be.
Right.
So those kind of rebuttals are...
They fail every time.
They fail every time because it violates HVCC, and it's viewed as swaying the appraiser, so you would never get a solid response for that. So you have to use tactical data like... number of rooms is incorrect, or vicinity to backs up to a busy street.
There actually has to be a factual mistake, right? Or you have to use a different set of appraisals, like different comps.
A comp,
right? Yeah.
Yep, a comp. But if you start giving your opinion of what the adjustment should or shouldn't be, it's
so you're saying it's not a valid response to go nuh-uh.
Right. Nuh-uh. The appraiser, who's a licensed professional with hundreds and hundreds of hours of experience, et cetera, is wrong.
Yeah, so...
You can't do that.
So nuh-uh doesn't win.
Well, and let's talk about appraisers really quickly. It is definitely a dying breed. If you know anyone that wants to get in the industry, what happens is the average appraiser, at least in Texas, and I think it's nationwide, is, more than half the appraisers, in fact, probably a 60 to 70%, are over the age of 55.
Wow.
And so what happens is they're obviously going to retire.
Yep.
And there's not enough young people coming in. And the number of practice hours that an appraiser has to have before they can do an appraisal on their own is like 2,000
hours,
shadowing hours, where they have to be an apprentice shadowing a licensed appraiser.
Wow.
So if you're an appraiser...
It's like 50 weeks.
It's like a year.
Yeah.
So if you're getting into the business, let's say that I'm an appraiser and I bring in you and you're an apprentice, you're a guy that's coming in, you're doing your 2,000 shadow hours. I'm going to have to pay you something. Right. Because how can someone work for free for a whole year?
It's very difficult.
And for appraisers who really, guys, they don't make ginormous amounts of money. Like there's no millionaire appraisers walking around. there's just not. They make a good living.
Right.
I think a licensed, experienced appraiser probably makes north of 70 to 80. But if you're coming in, you're a $35,000 to $40,000 guy. If you're a newbie shadowing, whatever.
Right.
But not a lot of appraisers have extra margin sitting around to have on staff someone shadowing them, learning for $40,000 a year.
Right.
So some do, and we've got some friends that they've got an apprentice program, but once you're in and you're licensed, I think, you can pretty much double what you're earning. So if you are someone listening and you want to do a career change, just contact me, because I do know some good appraisers.
Yeah.
Inotech Appraisals will take people on that program.
Awesome.
But it's very difficult because there's not a lot of young people that are getting in. And so you've got less of a pool of appraisers doing this work, and it puts a crunch on turn times. And it's all over the country. I've got friends that are mortgage lenders in Seattle, and that market is so hot. It takes 3 weeks, sometimes 4, to get an appraisal.
Is that right?
Yeah, 4 weeks to get an appraisal, because there's only so many appraisers.
Raising their prices?
Oh,
it seems to me like that's a supply and demand issue, right?
Yeah, you raise it $500 and you get a rush. Yeah, but
Yeah.
Yeah, but then what if everybody gets a rush? Then you've got, but yes, it does push prices up. But it's very interesting because I think people take for granted turn times on appraisals and supply and demand and what the appraisers generate.
Well, I want to remind people they're listening to Right Path Real Estate Radio. And what's the best number to contact you?
We are at 713-579-3611. That's my direct line.
Nice.
713-579-3611.
And what's your email address?
Email is jennifer.hernandez@legacymutual.com.
Perfect.
Yeah.
And so to call us, if you have any questions about mortgages, about retail mortgages, about appraisals, any of that kind of stuff, give us a call, 713-785-1817. We also, I have to point out, we have a radio show sponsor, Next Gen Appraisals. I don't know if you've ever met Michelle, but
I haven't. Yeah, I'd like to meet her.
Yeah,
okay.
2 minutes.
Yeah, she's amazing, and she's been growing. And she started out as a one-person shop, and then now she's added another person. I think she's about ready to add a third. And there is. I tell people right now, if you feel like you're not ready for college, it used to be go to college or go into the military until you figure your life out. But right now, I think, there's some good trades out there. Become an electrician. We are short on electricians now. Become a plumber. I mean, plumbers, man, they're talking about
become
wait
an
time.
appraiser.
Or
Yeah.
become an appraiser, right. Yeah, even inspectors, too. Have you found there's a shortage on inspectors?
I think so. I think so. I think those are trades that think about it. It's a lot of outside work. It's hot. I mean, it's labor physically intense. Inspectors have to crawl
in
under
attics,
things
right.
and in the attics.
Right.
And yes, in fact, FHA appraisals now. If there's a crawl space or if there's an attic space, the appraiser has to actually get up there
1 minute
and poke his head. Like they have to get there's a rule that says they have to actually get shoulders above and peek around. Like they didn't used to have to do that, but
Yeah.
I mean, they have to look everywhere, so they have to have access
They
to
take
those
pictures and and do all of that.
Yeah.
All right, you're listening to Right Path Real Estate Radio, 713-785-1817. Give us a call, or you can follow us on the Book of Faces at rightpathrealestate.com, or just go to facebook.com and then Right Path Real Estate. And if you want to just follow us there and you can type in questions, we'll answer them live on the air. So give us a call. Thanks.
Mike's off.
All right, so Charles is joined. Hey, Charles, what's up?
Do you have cracks in your brick, doors that stick, or sheetrock that's coming apart? Then you may have foundation movement. Due to our expansive soils in the Houston area, it's probably not a question of if you have movement, but when. Call Foundation Check for a truly independent, unbiased foundation evaluation. Foundation Check has been in business since 2009 and has completed over 1,400 evaluations. We're not in the business of repairing foundations or selling you unnecessary pier work, but we are in the business of evaluating your foundation. Our product is designed for house flippers, landlords, or even owner-occupied properties. Each of our files is reviewed by a licensed engineer. Remember to check before ever repair. Call 346-702-3825. That's 346-702-3825. Or you can reach us online at foundationcheck.com. That's foundationcheck.com.
Virtuoso Graphics is not your ordinary sign shop. We are your one-stop shop for all your signage and graphics needs. We are located in the Galleria area and have been in business for over 13 years. We offer a wide variety of signage products, including bandit, aluminum, and ADA compliant signs to 3D letters. Need something printed? We can get that done too. From outdoor banners to business cards and anything in between. Take advantage of our laser engraving services. We can custom engrave on many products available through our catalogs or your own personal items. From large orders to small, we can accommodate your specific needs. We pride ourselves on customer service and work one-on-one with customers to make sure they get a good quality product. Come view our showroom to browse our many samples to get you inspired. Want your business to get noticed? Give us a call at 713-623-4425 or visit our website at virtuoso-graphics.com.
Did you know that there are over
2 minutes.
$24 trillion in retirement accounts in the U.S.? Imagine if you could use someone's IRA to fund all of your deals. Well, you can. Quest IRA is based locally here in Houston, Texas. At Quest IRA, we offer retirement accounts that can be used to invest in real estate, promissory notes, private entities, and much more. Many of our clients loan money from their IRAs to fund real estate deals all over the country. We don't sell any investments or give advice. However, we do hold free networking events, weekly educational classes, and free consultations with an IRA specialist. For more information, visit our website at questira.com or call us at 1-855-FUN-IRAs. To tap into the $24 trillion in retirement accounts in the U.S., call Quest IRA at 1-855-FUN-IRAs or go to our website, questira.com.
Time is money in a
Hey, good morning, Whitney.
Deal. If your insurance company is slow or non-responsive, you could lose a deal like that. You need a quick turnaround on quotes or binders? The agency for that is Benchmark Insurance Group of Texas. The team at Benchmark understands the investor mindset. They know what you need and when you need it. We're here for you. Are you a rehabber, wholesaler, buy and hold, or flipper? Bundling your properties on a single policy will help save time and money. Benchmark has been in business for over 10 years, and we insure over 30,000 properties. Contact Benchmark about our exclusive investor package. Call us and let us show you what we can do for you at 281-569-4353.
No, it's not actually.
281-569-4353.
It's our billboards.
Or online at benchmarkbroker.com.
We have billboards that look like that.
Benchmark Broker.
So that's our phone number for people to call in on
281-569-4353.
So you can track it.
Or online at benchmarkbroker.com.
Enough to know a close percent yet?
This is Business 1110.
Like,
I think we do.
deals that
All right, y'all, stand by. Hot mics in 5, 4, 3, 2, 1.
Hey, welcome back. Right Path Real Estate Radio, 713-785-1817. Looks like my Book of Faces page is frozen, so that's not good. So if you're calling and asking questions, call in. You don't have to just do it on the Book of Faces. You can call in and put your fear of calling behind you. And so, yeah.
What's the number?
It's 713-785-1817. And what's your number? I've got Jennifer Hernandez. She's with Legacy Mutual Mortgage. She's in the studio live. She's going to give you her number.
713-579-3611.
I have to say, so you know we're moving, right? And I'm going to be so happy to be out of this building because Comcast, they're sorry. They're just, I think I can say that on the air because I think everybody knows. And their customer service is horrendous.
Yeah, we have them at home, and it's in and out all the time.
Yeah. And so... Yeah, if they're anyhow, you don't. I'll go. I'm about ready to go off on a rant. I probably shouldn't do that. I'd rather talk about
no
more
cable bashing.
No cable. No, you know it is kind of interesting. You know when you have a platform like your own radio show to be able to bash somebody that you really don't like, but it's just too easy of a target. So Comcast they suck, and I think they know it. I think that's not one of the 7 deadly words that I can't say, right, Nikki?
You're good.
Okay, good. All right, I think I can say that one. All right. Anyhow, but Legacy Mutual Mortgage does not suck. Y'all are amazing.
We don't. Oh, well, thank you.
Yeah.
So no, we're bank owned, actually 50% bank owned by a small Texas regional bank, Crockett National Bank. So it gives us deep pockets to be able to get contracts with a lot of investors behind the scenes that we can sell our loans to. We're also Fannie Mae Direct, so it means that we can underwrite also to direct raw Fannie Mae guidelines. We don't always take that route because, believe it or not, the Fannie Mae window, or you call it, the price is not as good. We can get better rates from like a Wells or a Chase, but we've got it in our back pocket.
Because they want to undercut Fannie Mae's pricing guidelines.
Yeah. So, but the thing is we have good options. And there's some programs as well coming out. In fact, I had a past client call me this morning, and he's just one of those traditional no-doc guys. Back in the day, I would do no-doc loans for him. He's just a no-doc kind of a guy. And no-doc meaning Social Security number, he's breathing, he lives at a certain address, and like you asked, nothing else. Like that's back in 2005. We were doing a ton of that.
Right.
And he said, Hughes, he still calls me Hughes because that's my maiden name. Hughes, when are those no-doc loans going to come back? And I said, Hamilton, they're not. I don't know if they are, but there are.
Eventually they'll come back.
Probably, but there are some bank statement.
The pendulum swings, right? I mean, it will overcorrect where we'll get super lenient again. It's
too bad because I think that structuring backwards and pendulum going that way was the right thing to do. But there are some bank statement programs out there. So if you are looking for something that you've been in business at least 2 years and you have 24 months of bank statements that show healthy deposits, we can do that. You'll pay 7.5% on a primary residence, probably more on investment. But there's also some programs for investors. There's Fannie Mae will accept up to 10 properties financed. But what happens is you have some investors that will chop back those guidelines and say, okay, well, we know Fannie Mae will accept 10, but we only want to do 4.
Right.
So,
why do they do that?
They just want to be more conservative. They don't want to deal
Are they
with...
thinking that Fannie Mae is too risky in that?
They want their portfolio to be squeaky clean so that they can further and easier sell it to a pool of investors later on hedge funds or whatever.
Got it.
So they just want to be really, really tight.
Got it.
And so
it's for their secondary or tertiary markets that they're trying.
That's right.
Got it.
And so you've got this bucket of 4 properties financed, including a primary, and then it goes to 10, if you're 5 to 10. And then there are a couple of investors that will do unlimited. They only want 5 or 6 loans with them, with their entity, but they will allow you to have tons of properties. So it's painful because when we do that, we have to get, proof of property tax, insurance, et cetera, on everything. So when you are actually, we're just organically kind of talking. We didn't really know what we were going to talk about, but on a loan application, it's really important that if you are a borrower and you're disclosing any property that you own, whether it's a piece of land or anything at all, as insignificant as you think it may be, because it's in another city, or, oh, there's no loan on it, you don't need to worry about it. Well, actually we do, because there's a tax responsibility or insurance if there's a structure on it. So it's just important that you disclose all that.
Free and clear. I mean, whatever tax amount is due, that's going to be minuscule versus the asset that you're lending against.
It's going to be minuscule, but we have to count that prorated monthly amount in the debt to income ratio. So it's just important that we get everything. We did have a client one time, and we found out through our own, there's behind the scenes searches that we do on our own, and he had 7 owner financed properties that he forgot to tell us about. And they were owner financed, so he didn't think that it mattered, or I'm not sure what he was thinking. But
so he owned the property that he had bought them owner finance. Is that okay? So
we didn't find. You can't tell from just pulling a credit report, right?
Right, because they're not showing up on his
But
credit.
he didn't disclose those to us on property real estate owned, and he just must have not wanted to deal with it, et cetera, thinking, oh well, I know I can pay for this place, so it doesn't matter. Well, it did matter.
Did he count that income as income?
No, he didn't count the income. Or in fact, he disclosed the properties to us, but he told us they were free and clear.
Oh.
So another blooper we had.
But the people that had done the owner financing, had they actually put a deed of trust on the properties?
They had.
Okay.
And through a secondary behind the scenes search that we did, we found out about it. So another blooper we had years ago was a gentleman that didn't tell us that the properties that were free and clear were actually secured by a bail bond that they must have done for
a family member,
somebody.
Yeah.
And they were secured by
a stranger that lives down the street.
Some liens that obviously they would use that as collateral for the bail bond. So it was really interesting. So, but all kinds of stuff comes in. So behind the scenes now with technology, there are ways
Hard to hide.
We will find out about it.
Yes.
So some people think, oh, I'm not going to talk about it because it's insignificant and it shouldn't matter. Well, it really does. So
yeah, and it's better that you disclose it up front so that you know what you're dealing with, right?
Yeah, and then we can find a way to
work around
to make it work. Yeah.
Yeah.
Yeah, absolutely.
So how many times are there not workarounds on things like that? What are some of the things you can't work around?
Well, we can't. Recently, we weren't able to work around a title issue where the seller didn't someone passed away and it wasn't properly probated, and there's some distant cousin that something and seller's not able to be located. So if you're a listing agent or if you're taking over, as you know, when you're taking over a property, there could be wrinkles in that title policy, and so those things have to be worked out prior to you listing the property, because then you've got a buyer that comes along, and these poor buyers, they spend hundreds of dollars on inspections, et cetera, and then the property falls out due to title issues from the seller. It's just negligent.
It's a lot of work. That everybody's going. It depends on where it gets caught, right? And hopefully you pull in the title pretty early on.
Yeah, this title company did not pull it early on, and it was not found early. And it was about a week before closing, and we did a lot of work on it. It's just wasted effort,
right?
that could have been handled. But title issues sometimes have a difficult workaround. Sometimes they work out, but sometimes they don't.
Right.
And appraised values, when appraisals come in short, or condition of a property, we have, an appraisal can come in at value, but there is a electronic report that lenders have to run that runs it through this database that hooks up to Fannie Mae and Freddie Mac, and it gives it a scale of 1 to 5. And if it's a 5, then we have to get kind of a review appraisal. And so it could make value at 170 or whatever, but just making value doesn't mean you're in the clear. So there's checks we still do behind the scenes that we have to get over. And we've had to do it on a few of your properties, and it's always worked out. But what happens is especially if you've made improvements to a property, that data is not in the Fannie Mae data bank yet.
Right.
And so there just needs to be a second review with eyes, some other person looking at the appraisal to make sure that everything was above board and there's nothing funny going on.
Yeah. No straw buyers, all that kind of stuff.
Yeah. I had a seller recently ask the agent to ask me, or we had a seller that was getting huffy puffy. Maybe there wasn't an agent. And he says, "Oh, well, I already have an appraisal, so they can use that." And I'm thinking, like, what planet are you living on?
Right.
Like, we're not going to accept a seller
Yeah.
appraisal.
Why? Just trust me. Nod, nod, wink, wink.
Yeah.
Right.
So, I mean, there still are some other alter opinions going on, but
yeah. 713-785-1817 is our phone number. You can call us in, Right Path Real Estate Radio. Donovan's asking, did you say you can sell your notes to individual investors?
No. I didn't, if I said that, I didn't mean to, but no, we sell our notes to institutions, like Wells Fargo, Chase, BBT. We sell them to those, not individuals.
I guess in theory you possibly could, but why would you want to, right?
You could if there's investors out there that want to buy them, but most institutions will sell to other institutions.
Right.
Yeah. And anytime, he brings up a good point. We've had questions before where we're trying to meet, the client can't make a full down payment or whatever it is, and the seller wants to know, oh, can I do a second lien? Can I just do a second lien? Well, the answer is no.
Right.
Because history tells us that happened way back when, and then the seller will later forgive that lien. They do it just to make the house sell.
Right.
So that's no bueno. And then we just scrutinize anytime there's a non-institutional loan that we're paying off, or the radar is always on because, like I said, historical data shows us, or has shown Fannie Mae, that when deals went bad, there was always some type of non-arm's length. Think of it as an arm, and you want to be arm's length. And when it's too close together, when the seller and buyer know each other, when it's family, or all these characteristics of deals that go bad in the past. And it does set a tone, unfortunately, for those of us that are doing it the right way. If someone's, a lot of these transactions are above board, but you just never know. So we have to have a heightened level of due diligence on those kinds of loans.
Okay, so you're listening to Right Path Real Estate Radio. So on the other side of the break, what I'd like to get into is I know that our state legislature is in session right now, and unlike the federal government, our state legislature only meets once every other year, so that means they can't get a lot of stuff done. And I wish our federal government worked that way also, and then maybe we'd have a better federal government than we have states. But anyhow, our state government runs awesome, and I want to talk about, are you familiar with any legislation that's coming up as it relates to mortgages and things like that? So let's talk about that on the other side of the break.
Okay.
You're listening to Right Path Real Estate Radio, and I'm live in studio with Jennifer Hernandez with Legacy Mutual Mortgage.
Mike's off.
I got to say I'm not familiar.
Oh, is that right? Okay.
No.
Oh, all right.
Let's do a search really quick.
Yeah. Well, I know one of the things that's been a topic of conversation recently is, like,
Are you an active real estate investor?
within mortgages, there's always a due on sale clause, right?
Your team.
You familiar with that? So in other words, you sell a piece of property, but sometimes people get upside down, and investors will buy those properties subject to the existing mortgage staying in place. So it's kind of like an owner finance. Are you familiar with that play?
In your residential and commercial real estate law needs.
Really
Contact Taylor Law at 346-231-1120. We draft and review docs and structured transactions and represent you in disputes and litigation. Or choose one of our transaction packages to cover your sub-2, wholesale, wraps, or private financing deals. Our business and commercial services include business contracts, entity formations, and business consultations. If you need a reliable, dedicated firm to serve on your team, contact Taylor Law at 346-231-1120. 346-231-1120. Paid for by Gerald Ehlert, Principal Offices in Houston, not board certified by the Texas Board of Legal Specialization.
There's just a lot of noise.
You found or inherited a great investment property. Problem is, you don't know how much it's worth, or more importantly, what to do to maximize your investment while mitigating risk. This is exactly why we started Next Gen Appraisals. Next Gen is a group of appraisers specializing in investment real estate. We understand that investors aren't just looking for a number of what their property is worth, but a comprehensive analysis of the market. Give NextGen a call at 713-346-9911 or check us out online at nextgenappraisals.com.
Are you expecting to close accurately, on time, and with lots of communication on your home purchase? You've come to the right place. I'm Jennifer Hernandez, Senior Loan Officer with Legacy Mutual Mortgage. Our goal is to give our borrowers and referral partners an amazing experience during the loan process. My team believes in putting people and culture before results. Our company concentrates on building those teams who operate with structure, process, and recognition for going the extra mile for you. This way, we have the energy to make this your best home purchase ever. Give us a call today to find out the simple steps to get started. I'm Jennifer Hernandez, the Hernandez team at Legacy Mutual Mortgage. Jennifer.legacymutual.com or call 713-579-3611. Again, Jennifer.legacymutual.com. We can't wait to consult with you soon. NMLS 514497.
Equal Housing Opportunity Lender. NMLS 514497. If you have cracks in your walls, ceilings, or floors, you may have a foundation leveling problem. Do you have doors that stick or just won't open right? Maybe you have gaps in the bricks of your fireplace. You need Green Tree Foundation Leveling, a fast, high-quality foundation leveling company based here in Houston. They know how hot it gets on the Gulf Coast. High summer temperatures, heavy rainfall, and clay-rich soils are leading causes of foundation cracks. If you have a cracked slab or a shifting foundation, call Green Tree Foundation Leveling at 832-329-1687. How old is your house? Many older homes in our area require foundation repair simply because of our climate and soil conditions.
Talk about what you know, and I'll
Yeah.
talk about
Well, because I know, and don't forget your microphone, but like, because Donovan is he's a note buyer, and so I don't understand why you couldn't perhaps market.
Yeah, I just think that it's for a company our size where we do $1 billion plus a year.
Yeah.
It's just too much trouble to get a bunch of individual people out there.
Mm-hmm. You know. Foundation Leveling.
I wonder, is there like a commodities marketplace that you just throw it out there, and that there, or do you just deal with certain buyers? I mean, is there?
I mean, it's via the investors that we sell to, and what they do is when we sell it to them, they pay us a yield spread premium. So, like if we were going to send it to individual buyers, they'd have to send us, they'd have to pay us a spread up front to take over the loan. I mean, I just think those kinds of loans are better in just the private market. And there's always going to be a market for that. But the big institutions like us, we're not going to deal with a bunch of one-off guys.
Yeah.
You know?
All right, y'all stand by. Hot mics in 5, 4, 3, 2, 1.
Hey, welcome back. Right Path Real Estate Radio, 713-785-1817. That's 713-785-1817. So we cleared up a couple of things during the break. So if you're listening on the Book of Faces, you heard the banter back and forth, just the talking. And so one of the things we discovered is that Legacy Mutual Mortgage, although they do sell to investors, it's the institutional investors, the Chases and the Wells and the Fannie Mae's, et cetera. It's the big ones, not to individuals. Because I know, that we're really good friends with Scott Carson, who is a person that teaches note buying. He normally teaches people how to buy non-performing notes.
Okay.
And typically what will happen is, and you probably know that there's that marketplace that, like, if Chase has a bunch of non-performing debt, they normally sell it off $1 billion at a time, and it's
Right.
a mix of non-performing car notes and non-performing credit card debt and non-performing house notes, and they'll sell that off to big hedge funds, and then those hedge funds will cherry pick and they'll sell off the car notes to people that want to buy car notes and the house notes and et cetera, and he'll buy tapes of houses, non-performing notes across the country, and teaches how to do that and all. And so I can imagine that people, we also know people that do owner finance plays. They'll generate their own owner finance notes, originate them, keep them compliant, all of that, and then they sell off those notes to individual investors. But sometimes those are 9.99% interest rates, et cetera. They're higher risk, higher reward, all that kind of stuff, and you're buying them at a discount and all, whatever. So that's why I imagine Donovan's asking, hey, can I get it on?
No, it was a great question. Now I'm thinking about, I did use the term investors, and so his ears plugged up,
yeah,
obviously.
Of course, because we've got a whole bunch of investors.
institutional investors.
Yeah, you mean
for
like
stuff we do.
Yeah, you actually, I wouldn't consider Chase an investor, but in this respect, they are.
Yeah.
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 They're investing their savings, I guess, the other people's savings. Putting it.
That's right.
Yeah, okay. So anyhow, so you're listening to Right Path Real Estate Radio, 713-785-1817. And what's Legacy Mutual's number?
My direct line, 713-579-3611.
And y'all's website?
Jennifer.legacymutual.com.
Perfect. And y'all go all over Houston. And I know that you have other branches that do Dallas and other markets. And how big is Legacy Mutual on a national footprint? Because I also know that now we're broadcasting in Dallas, but we have listeners at our last Dallas event. We had people flew in from Seattle, Washington. We had people came from San Francisco, from Pittsburgh, from Oklahoma, from Boston,
So we have offices in Texas. We have offices in Colorado, Tennessee. We can do loans in New Mexico. And so if you're listening and you need a connection in wherever you live, I'm part of a national coaching organization of top lenders and realtors, and I know someone in almost every state. So I could definitely introduce you to a professional that's going to do a great job in that state. So you could always contact me for that if you're listening and you are in a different state and can't use us. So yeah, thanks for asking.
Yeah, because we actually Denver was one of the ones that we also had somebody.
We know someone there
came from Denver. Yeah, for our last event.
So just know I've got a connection to almost every state.
You know everybody.
Well, that's not true, but I do know a lot of people.
It's interesting. I have to tell you a quick story. So it is interesting because you have to be careful. I've always taught people, be who you are, and it's always okay to be in process, being who you are on your way to who you want to be or where you're wanting to be. And I was talking to my dad. He told me a story one time that he was hanging out someplace and he overheard somebody else say, oh, you're Perry Perry, and that's my dad's name. And some guy was passing themselves off as being him. Actually had a business card, was introducing themselves. And so you never know who's listening. So when you are out there professing to be who you are, what I'll tell you is you know a ton of people. You really do. You're not a poser that says you know a ton of people.
I do.
You really know a lot of people. So that's the kind of people you want to network with. So next time that she's at an event, you need to walk up, meet Jennifer Hernandez, get to know her, and just pick her brain, how she got started and all of that. So
thanks for the compliment. I am a connector. That's just internally who I am. So I love to connect people. Whether I benefit from it or not, I just want to help you get what you want.
Right.
And eventually the universe will provide somehow.
Absolutely.
It'll fall out of the sky and land in my lap at some point. So you had a question before the break. We were going to talk about some legislation. So I'm embarrassed to say that statewide, I'm not aware
because y'all
of
are
any
more controlled
legislation.
federally than y'all are statewide.
Yeah, I do know just from articles and stuff that I read on a national level. So the CFPB, the Consumer Federal Protection Bureau, wait, maybe that's backwards. Whoever it is, CFPB. They regulate the mortgage industry now, and so they are not regulated or overseen by anybody, by the way.
That's
so
crazy.
Whatever they're just the sheriff in town.
So they're not
and
accountable to anybody.
They're not accountable to anybody. So that being said,
so there's no check or balance for them getting awry.
Right. And so there still are things that are evolving post Dodd-Frank to where mortgage companies are finding out the hard way through, whoever the sacrificial lamb is of the company, that gets fined. You know, they're going after, of course, big companies because they have deep pockets. And there's been some companies that have been fined big money for marketing sales agreements, MSAs. So there's a big oversight or view right now on how loan officers interact with referral partners and what they pay for. So it is against RESPA for us to participate in anything that the other person, like if I go in a mailer with a realtor, we have to be equally viewable and the same size on the postcard, and she or he has to have paid 50%. Like I can't go in and pay for these postcards. Yes, I mean there are some rules, but there are some larger agreements where it's truly viewed as a kickback, and there's just a lot of uncertainty around it. There's some big folks that have been fined for stuff like that. I recently saw an article. I have to snope it. I'm not 100% sure that it's valid, but some mortgage companies, the CFPB is going after them for their participation in Zillow. So it's very common that some of the big Zillow realtors will go in with Zillow with some lenders. Don't ever ask me if you're going to call me. I don't do it. I don't pay for leads.
Yeah.
I'm 100% referral. So that's good. That's a good. Yep. Nope. Sorry. Can't do. I don't do that. But but there are some people that do, and they get business from it. But there is a lot of scrutiny around it. So those are the types of federal things that I know about of how the CFPB is viewing those types of relationships. And I know that forever, it's every time the state legislature comes up, there is also, I know they always try to overturn where the builders have their own mortgage company and they force people pretty much to use it. It's never overturned. I mean, the builders lobby is so huge.
Well, and doing the research, because we looked into this, is that there is, as a seller of a house, I can absolutely require that my buyer use a particular mortgage company, and that's not illegal, it's not immoral, it's not anything like that. I can't do the same with a title company. It's whoever's paying for the title is the person. Now, it may cost me a buyer, and so I have to weigh, do I want to put my guns out there and stick to that? But we, on many occasions, we have, especially in properties where we've got multiple offers, things like that, we absolutely require that they use you, and there's nothing illegal or moral or anything like that.
Yeah, as long as but the caveat to that is
as long as we're not receiving any benefit.
As long as there's no benefit, which there's not. There's no kickback at all, and you're not withholding any fees if they don't. You're not saying, oh, we'll pay the title policy or won't if you use her. You're just like, you have to use her. So, we have been able to do that. So, there's just a lot of noise, a lot of stuff going on, still a lot of litigious types of agreements, and really just think the arm's length. The whole purpose of everything is to be arm's length, whether you're a buyer, a seller, agents that know each other or don't. There's huge scrutiny when a seller is also the realtor. I mean, we look at stuff like that differently.
And also,
we have to.
Donovan added, it's the CFPB is the Consumer Financial Protection Bureau.
Oh, thank you, Donovan. I appreciate you.
Yeah, Consumer Financial.
On the flight, thank you very much for looking that up. So the mortgage loan officer didn't. I just always hear CFPB.
Yeah, right.
So thank you for that. Yes.
Yeah. So why was the CFPB created, allegedly?
It was created to merge a few federal divisions to where basically we used to be regulated by a couple of different, by HUD and also by Truth in Lending, RESPA, but then it all came under one umbrella. It really is more efficient because now there's just one entity that we need to worry about.
Now was RESPA and HUD, did they have some kind of accountability to some larger organization
I think
prior?
So, yeah.
Okay.
But they were also very different. So something could be okay with RESPA and not be okay with HUD and vice versa. So it gets really
so you
complicated.
Had some conflicts back then.
It was meant to simplify, and in some ways it has, but it's just the rule book is still evolving, if that makes any sense. And that was like 7, 8, 9 years ago. So it just
kind of like with Obamacare.
Yeah.
Hey, you're listening to Right Path Real Estate Radio,
That's right.
713-785-1817, 713-785-1817. Join live in the studio with Jennifer Hernandez, and her phone number is
713-579-3611.
And she's with Legacy Mutual Mortgage. So if you have any need if you're selling a property, really, that's where she comes in handy. Or if you're wanting to buy a piece of property
1 minute.
and you want a mortgage for yourself and you're looking for a great mortgage broker, that's Jennifer Hernandez and her team at Legacy Mutual Mortgage.
Yeah.
So we're going to go to a break just a few minutes early.
Mic's off.
All right. Or a few seconds early. Cool.
Awesome.
I'm going to return one phone call really quick.
A great investment property. Problem is, you don't know how much it's worth, or more importantly, what to do to maximize your investment while mitigating risk. This is exactly why we started Next Gen Appraisals. Next Gen is a group of appraisers specializing in investment real estate. We understand that investors aren't just looking for a number of what their property is worth, but a comprehensive analysis of the market. Give Next Gen a call at 713-346-9911 or check us out online at Next Gen Appraisals.
You're a newbie. You need to earn your stripes. You need to go. So,
Seller has too many title defects, too many dead people hanging around, taxman wants a slice of your pie. We work with sellers and title companies to resolve those defects and get clear to close so you get paid.
So
no one can guarantee success, but we'll do our best. Contact Ehlert Law at 346-231-1120. 346-231-1120. Paid for by Gerald Ehlert, principal offices in Houston, not board certified by the Texas Board of Legal Specialization.
Investor loans offering up to 100% financing are still available. You just have to know where to look. Look no further than Noble Mortgage. Noble Mortgage is a full-service mortgage company that's been helping investors since 2003. Noble Mortgage offers up to 100% financing to investors that covers purchase, repairs, and closing costs. In addition to private money, Noble Mortgage offers conventional loans, FHA, and even no-income documentation loans for both residential and commercial properties. Call and ask about our 5-point guarantee, which includes free pre-qualifications within 2 business days. Call 713-680-8100 or visit noblemoney.com. That's noblemoney.com. Our team has over 50 years experience in the mortgage industry. Call us today, 713-680-8100, or visit us on the web, noblemoney.com, noblemoney.com.
NMLS 292143, 8203 Willow Place Drive, Houston, Texas, 77070.
Selecting a foundation company and their product for repair is a lot like a game of chance. You simply don't know
We got
what
2
you're
minutes.
going to get. The foundation repair industry as a whole doesn't carry a license, nor is it regulated. However, Foundation Check utilizes professional engineers to review all of our files to give you the best foundation analysis in today's market. Remember to check before every repair. Call 346-702-3825, or you can reach us online at foundationcheck.com.
Are you looking for an investor-friendly general contractor for your investment property? Then call Fast Track Remodeling at 832-742-9992 or reach us on the web at fasttrackremodeling.com.
Fast Track Remodeling specializes in turnkey remodeling of single-family investment properties. Whether it's a flip rehab or a rental rehab, we manage every aspect of a rehab from start to finish with a highly efficient, standardized process.
Over the last 6 years, Fast Track has completed over 700 projects,
1
which has
minute.
helped us to create our 3 keys to success. Use a detailed scope of work so that everything gets done, train and maintain quality crews so it gets done right, and complete the work in a proper order so it gets done fast.
No more managing it yourself, no more doing the work yourself. Fast Track Remodeling really does manage it all.
So give us a call today at 832-742-9992. Again, that's 832-742-9992. Or reach us on the web at fasttrackremodeling.com.
Investor Loan Source is
And they're
Houston's
still working?
premier investor loan company. Our products and approval process
Did you
are
get them
unique
online,
in
or where'd you
Houston
get them?
marketplace.
Best Buy.
First of all, we loan based on the
Okay.
asset alone. That means no credit minimums, no income requirements, and no reserve minimums.
They're pretty lightweight.
Second,
The microphone
we
here
have
is just,
short-term
And people
loans
say
for
the
fix and
clarity
flip
is really good.
and several long-term options for rental properties. Since we're asset-based lenders, everyone is approved.
And I used to
Check
have.
out Investor Loan
I think I was
Source
one of the first
at
ones. Those are LGs, right?
That's ILS.cash.
I think so.
All right, y'all. Stand by.
This is Business 1110.
All right. Hot mics in 5, 4, 3, 2, 1.
Hey, welcome back. Right Path Real Estate Radio, 713-785-1817, 713-785-1817. We're talking about CFPB and lending and all the rules and how basically the process works. And I'll tell you how we use Legacy Mutual Mortgage and more specifically Jennifer Hernandez's team is that obviously we buy, fix, and flip a lot of houses. And so, we buy the house. We're using private money in order to buy the house. We are normally going to be in construction on a house either less than 30 days or a big rehab for us is 3 or 4 months. And so then once we have it completely rehabbed, we list the property. And when the offers start coming in, like a recent one that I tell the story about is one on a street called Ashford Hollow. We bought the house for $110, $485. We put $110 into it. We sold it for we listed it on a Friday, I think at 9 o'clock at night, which is not a great time to list a house. But we had 7 showings on a Saturday, and we listed it at $364.9, and we got an offer at $370. We had 4 offers, and one of those offers was $375. And they were putting like $70,000 down. And we required that they get a pre-approval letter with you guys. Mm-hmm. And that gives y'all an opportunity to meet them, get to know them. And I think even before that, we had considered another offer as well. And y'all do kind of like a red light, green light program where you won't really tell us why or not, but you can say, hey, this guy's a red light, this guy's a green light, take this one over that one. And it helps us with the buying decision because we don't want a deal to fall out 21 days, 28 days, when you get that close to closing and you have to put it back out on the market again. Every day you own a piece of property, it costs an investor money. Mm-hmm. So you guys are really quick at doing that red light, green light, and y'all do a more complete background check and all that than, a lot of the pre-approval letters aren't worth the paper that they're printed on. And and so y'all actually y'all have a very thorough pre-approval process. Mm-hmm. And so then we require that they get a pre-approval with you guys, and then y'all earned the business in that case, and then y'all actually did a 21-day close with these folks. Yeah. Which means that we bought the house. It was about a 90-day rehab, and we had budgeted 90 days for the rehab, and we had budgeted 90 days to be on market, and we had budgeted 60 days for closing. So we had budgeted owning the house for 8 months, but we actually owned it like 4. So what that does is that extra budgeting of hold time, we put 4 months of hold time profit. It was going to be an expense, and that turned into profit. So that's awesome. That's how an investor can build in additional profit is by executing well. And the way that you execute well is having good partners. Mm-hmm. And because business is a team sport. And
it definitely is. It definitely is, and we appreciate everything you guys do to support us. And it helps. It helps with you guys knowing that if I tell you that. I mean, we've had delays. Yeah. I've had to push closing for a couple of days, but you know that coming from me, if I say it's delaying 2 days, it's not 2 weeks.
Yeah, right.
Which is what happens where I think other, loan officers, I think they all mean well, but we all operate through a certain level of fear, right? Oh, I don't want everyone mad at me or whatever.
Right.
Just tell them how it is up front and just go ahead and, I warned a seller or a listing agent the other day, listen, we're probably going to be delayed. We need IRS transcripts. We've been under contract for 5 days, and we're getting on other clients. IRS is not turning stuff around. They're not processing tax returns quickly. I'm just letting you know that we're probably going to not close on time on this one.
Yeah.
And so I'd rather tell you now than 2 days before closing or a week or whatever.
Right.
So...
Okay, so you've been listening to Right Path Real Estate Radio. I've had Jennifer Hernandez in the studio. We've got less than a minute. What all the different ways to get a hold of you?
So online at jennifer.legacymutual.com.
30 seconds.
Phone number 713-579-3611. Email jennifer.hernandez@legacymutual.com.
And what's the next event that you've got that you're going to be at?
20 seconds.
Actually, tomorrow we are doing an MCE. If you need MCE hours for 2 hours, it's from 12:30 to 3 in our offices. You could just shoot me an email on modern staging, how to stage your listing properly so it sells
quickly.
And
don't forget our event on the 18th at the Hilton West Chase, $99.99 Westheimer. Go to our page, Right Path Real Estate Radio. Actually, rightpathrealestate.com. Have a great day.